Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Monday, the 29th of November. A lot of familiar faces here over the last 2-3 updates on the Bulletin Board Heroes, not surprisingly given the COVID reaction that we've had over the post-Friday period. First off with Avacta, and here you can see that we had the rebound off the 50-day moving average at £1.16 roughly. Looking towards that resistance line there from July as high as £1.54, £1.55, something like that. And the upside valid, at least while we're above the low 120s, so Thursday, Friday resistance around that kind of area. Nice RSI bounce around neutral 50 as well, which does suggest that we have a leading indicator on potential move towards that 150 zone, even if the shares fall away after that. Going on to BT, which is obviously not a small cap, but here we've got a situation where it's just worth checking out the price action here. The reason for the inclusion today is the one-day island reversal for the stock. That shows, I think, a lot of strength in this situation, back above the 200-day moving average at £1.62, and the upside here up towards 180, which was August resistance. There's also the bonus that shares gapped up at the beginning of the month through a resistance line and held that gap. So what sort of island gap reversal there for October, November, and then the one-day island reversal as well. I think it's called an abandoned baby in the candlestick vocabulary, and that means that, or suggests that there is a lot of bullish, sort of underlying bullish sentiment here for the shares, even though they haven't actually gone up that much compared to where they were a couple of months ago. Onto a stock which I find fascinating at the moment. Braveheart, here we can see that the shares also having bounced off their 50-day moving average at 32. We're holding above the previous initial November resistance at 40p, and the longer we remain above 40p on an end-of-day close basis, the greater the chance of 47 at the 200-day moving average, and even up to 70 pence as a best-case scenario, maybe over the next 1 to 2 months. Obviously, that does, I suppose, depend on the COVID situation, which seems to be very much on the front foot at the moment. On to EQTEC, and here we've got, we had the gap higher, inside day breakout, gap higher as well, looking for an end of day close through the 200-day moving average at 1.5 pence. If we can get that, then it's perhaps up to 1.2 pence by the end of January. Stop loss here, back below the 50-day moving average at 1.25 pence. Haven't looked at i3E for a long time, i3 Energy, but here the interest is that we've had a sort of third rebound off the 200-day moving average at 10.5 pence. The longer we remain above that particular feature, the greater the chance of at least a retest of the 12.5 pence area at the 50-day line, and obviously then maybe by the end of January up towards 14-15 pence. But the key here is that we hold pretty strong looking support just above the 10 pence area, which has been in place since August, in fact. So this looks like the accumulation zone for the shares. Moving on to MyHealthChecked, and here just a bit of a giveaway for the bulls, really. We had the gap through the 50-day moving average last week. We've touched the 200-day moving average, which was our first what sort of initial target area. I suppose you could argue that it was up to 3.6, maybe 3.7, with the top of that gap down from September. But looks like we're an end-of-day close through the 200-day line at 3.5 could take us up to 4.5 as a best-case scenario target, which is post-July resistance for the shares, maybe by the end of next month. Novacyt also coming up with the goods, not surprisingly, sort of very, very easy in terms of the price action here. I was looking for £5 last week. We got 4.9 pence. I suppose not too far away from that. But we had the gap higher, broke the 200-day line at 407, and at least while we're above the old peak there, around 4.5 pence, we've got a chance of retesting the 5 pence area over the rest or the early part of this week. Bit overbought at the moment, so maybe that's something to watch out for. But if you're cautious, maybe you buy on dips towards the 200-day line at 4.07 pence. Nanosynth also coming up with the goods, at least earlier today. It's got its main resistance in the low 0.9s, which is actually where we had the target there, so that the charting worked there. Well, actually just about worked there, 0.895, the high so far today. But looking for the low 90s, and then above that up towards the 200-day moving average at 1.14 pence, I think, maybe by the end of next month. Early back below the 50-day moving average at 0.7, really delaying the upside scenario. Switching away from the diagnostics and the COVID plays, we've got Rockfire Resources, which has delivered a healthy update. Shares actually gapped up the start of the month through the 0.8 area, and they basically held the top of that gap, which is impressive. Above 0.8, looking for at least the 200-day moving average at 0.92, and then after that, perhaps by next month, into the 1 penny area, so 1 pence on the nose, or 1.05, something like that, for the end of next month. If you're cautious on the shares, maybe wait for an end-of-day close for the RSI back above the neutral 50 level. Finishing off with a stock which is probably not quite so frequent on this particular bulletin board heroes. We had a false dawn there for Sourcebio back in July, with a slight upside there, but then we made new lows. Current situation is that probably one's looking for a break of this line to continue, so that's around the £1.40 level, above £1.40 on an end of day close. We could fill that gap from September up towards the 160 to 162 area, perhaps by the end of next month. That's it from me today. More updates tomorrow.